candidate has the best plan to boost economic growth? Want to bring in Brian Brenberg. He is the professor of business and economics at the King's College in Manhattan. Good to see you, Brian. Thanks so much for joining us.
You bet.
And we do get a GDP number out this morning at 8:30, which is expected to show very, very fractional growth, up 0.4% if we're lucky. Which candidate has the secret sauce to economic growth?
I don't know if you can look at any of their plans and say they have the secret sauce right now. Look, when you're in an election period, you're talking about plans that have about zero chance of getting enacted, right? So what you're looking for here is who's signaling what about their intentions when they get into office. And what you're seeing from Cruz and Rubio and Trump is we want to reduce taxes on income and investment. Those are pro-growth moves, absolutely, especially compared to something like Bernie Sanders' plan where you're talking about huge spending increases. How are we going to fund that? So I think
$1.6 trillion of tax increases.
That's right. That's right. So I think
Bernie Sanders.
Yeah. So I think the issue here is what are they going to do when they get into office? Because they're promising big tax cuts, but of course we're also talking about huge decreases in tax revenue. How are they going to pay for that?
I feel like, you know, this market needs a catalyst to stabilize. You say you want to be putting money to work in stocks, but don't you think if we were to actually have a belief that we were going to see tax reform in year one of a new president, wouldn't that be a very powerful catalyst for the market?
I do think that there have been a massive calls for corporate tax reform.
Yeah.
I think if we get a situation where that comes to fruition, that would be or even close to coming to fruition, that would be a positive for the markets.
Corporate tax revenue is just 10% of the overall money going into Treasury. So it's not really that big of actual revenue, collectively speaking, but it's an important factor for economic growth.
And regulation, which I know in the two debates that you moderated, hit on this very hard, even in that first debate in Milwaukee. Regulation and rolling back a lot of the burden on companies. There was a worldwide survey done by a consulting firm where they polled companies around the world, and their biggest issue is regulation and over-regulation by the government. And I think that if you can get some sort of semblance of a more kind of easy tax policy on them, not even lower rates, but just a simpler tax policy, and then get out of the way in terms of regulation. If you look at West Virginia's economy is flat on its back because of the EPA rules.
And this is, this is the problem. You've had the Federal Reserve has basically carried the economy's water for the last several years. They can't do anything anymore. I mean, they're out of ammo. We're on the, the brink of tipping into recession. They can't do anything about it. Mark Carney, the Bank of England, yesterday said in a speech, look, we've done our job. It's government's fiscal policy that hasn't done their job, and I agree with him on that.
To Dagan's point on regulation, it really is Obamacare as one of the regulations that is keeping businesses down. I was speaking with a number of representatives yesterday in Washington, and they were saying that their constituents, small business, they are so focused on keeping the number of employees to 49. They don't want to have more employers than 49 because then they get hit with all of the fees that come along with Obamacare. So that's one of the key points, Lee.
It's a really key point. I think what we're seeing, too, is that there's just a complete lack of confidence. So much uncertainty. People don't know which way to go, where to turn. Everybody's confused, and that's why we are where we are. I mean, that's why people are responding to Trump. They want something totally different. So I think what we need as a candidate, whichever candidate, is going to give us confidence that there are going to be jobs, that there is going to be economic certainty, that there is going to be a plan forward. And, once we have that, then we might start to see a little bit more of a rebound, a little bit more comfort, I would think.
I believe that investment spending is probably the key here. Going forward, the consumer's in good shape, and I think a little more clarity for corporations would help them and provoke them to spend more on
Get them to put the deals that they've got on the shelf, get that into action. Get them to put some of that money on the sidelines into R&D, into infrastructure spending.
It could be worth 3 to 4% of GDP.
You want to talk about something that you talked about, Obamacare, that is hanging over the heads of corporations across the country, is the Cadillac tax. It was it was the 40% excise tax on high dollar health plans. That's going to change health insurance for every American, potentially, that gets their health insurance through employers. It was supposed to kick in 2018. Now it's been kicked down down the road for 2 years. That is the kind of, if you're trying to manage budgets, now you're delaying it and delaying it and delaying it. It's like, I don't know know how to deal with this.
Well, this is the policy uncertainty. I mean, it's a total question of uncertainty right now. It's the policy uncertainty, it's the regulatory uncertainty, and it's just the macroeconomic uncertainty around the globe in emerging markets, China, commodity prices. The next president has to create some structure, some infrastructure of policy that gives businesses a little bit of certainty, a little bit of leeway, a little bit of room to look ahead. Nobody's doing that right now.
Yeah, I mean, that alone would be a catalyst for markets if we had some stability and certainty in terms of what's around the corner. Yeah. And that happens. Going into November, you have to believe that, we'll see a real, reaction from investors, don't you think? I mean, I don't know. I hope it comes sooner than November, but.
Yeah, I hope so, and I hope to have more clarity on earnings. Every year when the earnings estimates come out, most of the positive growth is back-end loaded in the second and third quarter. So let's hope that we get the first and second quarter numbers actually coming up so that the second half won't have to pull the load.
Does guidance suggest that we're going to have some stability at the end of the year? I mean, what are you hearing from companies in terms of their guidance?
It always does. It always does. I mean, but this year we've seen a reduction in the first and quarter, a heck of a lot more to the downside than we usually see too soon, which is, not, in my opinion, is positive because they overshoot to the downside, which leaves a chance of surprises.
All right, we'll take a short break on that. Brian, good to see you.
Good to see you.
Thanks so much, Brian Brenberg there.